Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. This morning's PPI inflation report came in red hot. And I think we're officially entering a reflationary environment again. That's right, reflation. Inflation is not just sticking around. It's actually starting to re-accelerate. And it's really important to understand that this isn't just about mortgage rates anymore. It's not just hitting interest rates or borrowing costs. It's hitting everything. Everyday living expenses, from groceries to gas, utilities, travel, all are monthly bills. And that may actually become the bigger housing problem. Let's take a look at it. PPI, Producer Price Index report, coming out Wednesday morning from the Bureau of Labor Statistics. And wow, what a number. Headline PPI rose 1.4% month over month. Imagine the consensus was that it would only rise 0.5%. But how about this? Annual PPI, inflation jumped to 6%. Core PPI surged 1% month over month. Annual core PPI rose 5.2%. These numbers are unbelievable and well above the consensus estimate. Listen to this. This is an ex post from Mohammed El Arian. He's a very well-known economist, and he's featured quite often on CNBC. He posted this morning after the report came out, quote, "Huge jump in U.S. PPI inflation, powered by an eye-opening 1.4% rise in April, nearly triple the 0.5% consensus. The annual rate hit 6%, crushing the 4.8% consensus forecast. Core PPI followed suit. While the mapping isn't one-to-one, these numbers strongly suggest that higher consumer inflation is still coming through the pipeline." Now, why does he say still? By the way, close quote. Why does he say still coming through? All right, PPI is producer-level inflation. This is what businesses are paying for. So they're paying a lot more for what they need to run their business. And what happens is when they do that, many of those costs end up getting passed all the way down to the consumers, which means what? Food prices, travel prices, utility, insurance, transportation, all of that will rise for businesses, and therefore the consumer has to spend more because businesses will pass that expense on to the consumer more often than not. So keep in mind, this is a big deal because we've been talking about mortgage rates and how much they're impacting housing. Well, what about monthly living costs? What if that goes up a lot? Right? I mean, I think we focus a lot on CPI, Consumer Price Index, but this PPI number is big. It's really big. And it just gives more reason for the Federal Reserve to leave rates where they are, definitely to not cut rates. And God forbid, raise rates, right? Hope not. All right, what's reflation? Why do I use that word? So reflation basically means that inflation starts heating back up again after previously cooling, right? We had a long inflation period there, but we eased a little bit at least, and then now it's coming back. We are seeing energy prices rise at a staggering rate. We're seeing commodity prices rise, shipping costs, oil, shelter inflation, all going up. What we pay for rent, that's what they refer to there, shelter inflation, right? We see oil moving, we know due to geopolitical tensions, right? So gas is up, airline costs are up, shipping's up. And I want to take a little bit of an outside-the-box housing angle approach to this. And I kind of hinted at it earlier, but I think people are missing the bigger housing story. Yes, rates hurt affordability. Higher mortgage rates clearly hurt affordability. But what about rising living expenses? People are getting hit not just with mortgage rate, but with food prices and insurance costs and energy bills, travel costs, groceries, everywhere, right? So the problem isn't anymore can I afford my mortgage payment? It's even now, can I afford everything? Housing affordability is impacted when all of these other things go up because people look at this holistically. They don't just look, oh, what's the interest rate? Okay, what's my monthly payment? Oh, wait a minute. All of a sudden, everything else is going up. All my other living expenses are going up. So, yeah, I want to buy a home. I want to buy a property, but I'm squeezed. I'm stretched. I'm financially exhausted from this constant inflation. And so even if let's say you get home price stabilizations, let's say you even get rates fall a little bit, how much will it help if everything else keeps going up? If rising everyday expenses keep going up, that can keep people out of the housing market too. Now, I still don't think we're going to get any rate cuts this year. I made that pretty clear in the last episode. This actually clarifies it even more. I don't think we're going to see rate cuts in 2026, not with this kind of data coming out, unless inflation cools significantly or unemployment rises sharply. But again, that's bad if either one of those happen. That usually leads to a recessionary environment. So I don't know if we want that either. But either way, right now, today, the unemployment rate is sitting at 4.3%. Now that's very low. Right? And because unemployment is very healthy, there's not a massive need. Why do I bring that up? Right? Why do I bring up unemployment? Because think about it if you're a seller of a property, and let me tell you, I've spoken to folks who have asked me directly, should I sell a property? Should I sell one of my investment properties? I've spoken to investors, not necessarily their own homes, but they have investment properties and they're wondering if they should sell, and they're seriously considering it because their monthly expenses are rising, insurance is going up, taxes are going up, maintenance, utilities. It's really getting tough to maintain a property. And as they get more squeezed financially, they might just need the money. I mean, I've had people say that to me. They're getting squeezed financially and they might sell an investment property just to get the money. Right? So investors who own multiple properties are thinking about this. Now, I still don't think this becomes a massive wave of distressed selling. And that's not what I'm suggesting. But just the fact that I'm getting asked is pretty interesting. Now, the reason is, of course, I tie it back to unemployment. Why I mentioned it's at 4.3% because unemployment is still relatively low. Most homeowners, they have substantial equity. They're employed. We've had strict lending standards as well. And nobody wants to give up those historically low rates that they have. And my first instinct is to tell people, look, if you can, try to keep the property, see if you can get an equity line of credit, refinance other debt, before selling a property entirely. That's not what I'd suggest you do unless you absolutely have to do it. But it's interesting that I've heard that question. Now, massive forced selling across the housing market? No, I don't see that. Not unless unemployment rises significantly, which, hey, look, it's not happening. Okay? All right, when you put it all together, inflation may be becoming a bigger problem again for the housing market. Reflation is here. And keep this in mind. It's not just mortgage rates anymore. It's food, it's energy, insurance, travel, utilities, everyday living costs impacting the housing market. This all ties into affordability. I still don't see a massive wave of forced selling. Unemployment rate is low, but the most likely outcome for now may continue to be a housing market that does not get interest rate cuts, that keeps rates elevated where they're sitting right now in that 6.3 to 6.5% range, and a housing market that stays a bit slow, a bit stuck, and affordability challenged for now. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at the Salib Group. or just send me an email to mark@thecelebgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free. Get exclusive bonus episodes and content, and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it.